Hi, and welcome to the more 5-minute St. Louis real estate market update for October 2017. I'm Dennis Norman, one of the broker owners at More Realtors, and if you'll give me about 5 minutes of your time, I'll bring you up to date on what's happening in the St. Louis real estate market. Before I get started, though, let me remind you that you can have all the information, all the market data that I'm sharing here and much more right in the palm of your hand by getting our St. Louis real estate market data app. We have it for the iPhone and for the Android. You can go to the App Store for the iPhone and search St. Louis Real Estate, or if you're looking for Android, go to the Google Play and search STL Market Data. And look for our STL Market Data app there. The little house with the red roof says STL Market Data, and you can have it in the palm of your hand. Here you go. When you open the app, you'll see that it identifies the zip code that you're in. Gives you home sale prices, sales for the past 12 months, whether prices and sales are up or down, inventory, price per foot, and much, much more. Plus, you can easily search for prices for condos or homes by county, city, or zip, and get what you want. So be sure to check that out, STL Market Data app. Now, why is market data so important, and how do we use it to help our clients make good decisions? We, at More Realtors, we really take what we do seriously, and we take our responsibility that we have to our clients, buyers, seller clients, investor clients, very, very seriously. And we want to serve our clients in the best way possible. So one of the ways that we differentiate ourselves from other agents out there and other firms is that we have a group of professionals that are really serious about what they do, know the market, study the market. How can an agent give you proper advice if they're not living and breathing real estate all the time? How can they do it if they don't have the market data and accurate market data and relevant market data that they need to really understand what pricing is? Well, we take it so serious at More Realtors that we have spent a lot of time, money, and effort developing our own proprietary software to develop our own charts and tables and data, compile our own data to make sure that we get accurate data. All of our data comes from the MLS, the Realtor MLS, but we make sure it's compiled and reported as accurate as possible. And then we spend lots of time sharing this with our agents and our agents with our clients. For example, here you can see just one little example where we've got a chart here where an agent was able to in order to help a client just really do some apples to apples comparison here and pull data on just specifically 3-bedroom ranches that were 33 to 50 years old in the Parkway Central School District and located within the city of Chesterfield. So in other words, found other ranch-style homes about the same size and vintage in the same school district in the city, and so that they could really see how the price of what they were looking at compared. Had a chart as well as the table here, which shows the median numbers during that period. So just some real useful information, as well as information for what was currently on the market like that, so you could easily compare, or so that client could easily compare what the sales activity had been on that particular type of home in the past several months, as well as what was on the market now, and an easy to comprehend map there to see where everything was. So that's just one quick example why this stuff's important. Now let's jump right into the update. First thing I'm going to show you here is kind of a big picture look here. This is the St. Louis MSA, the whole metro area. This is a 2-year chart just so we can kind of get a look at things. And it shows the median listing price, which is the green, the kind of bright green bar there, or line, as well as the median selling price, the red line, and then the number of sales, the kind of teal line over the past 2 years. And you'll see the seasonal ups and downs. What we're looking for is overall kind of trend. I drew that vertical red line there to show you, a year ago. So if we go over here to the right side of the chart, we can see where we're at now and compare it back to a year ago. And it's pretty easy to see that median sales prices are up, median list prices are up, and sales ending up a little bit above where they were before. This is one of the reasons why we like these charts. You might say, oh, I'm not really a chart person, or I'm not really into numbers and stuff. Well, the charts are great then. They paint the picture, or they illustrate it very easily. Okay, now let me draw a line here to see over the past 2 years. This purple line represents the median sales price over the past 2 years. So you can see it's a fairly steady and reasonable trend upward. If we look at sales for the past 2 years, you can see that line's a little flatter. Sales have not increased like prices have over the past 2 years, largely because of inventory. Now, if we just look at the past 12 months, this red line represents the sales price increase in the last 12 months, and blue line sales. And once again, you can see that the rate of sales is not keeping up with the rate of or the home price increase. Again, largely due to inventory. Now, when we're going to zoom in and look at the 5-county core market. So this is the bulk of the St. Louis real estate market on the Missouri side of the river. It would include the city of St. Louis County, St. Charles County, Jefferson County, and Franklin County. And what I'm showing you here is a 2-year chart for home prices and sales. I'm sorry, not a 2-year chart. This is actually a 10-year chart for home prices and sales. And this shows price per foot. Sold price per foot would be the best way to really compare home prices. Gives you a more accurate comparison than just looking at the gross sales price. And I wanted to look at this because you're probably starting to hear a little buzz out there about maybe there's a market correction coming or perhaps another bubble. So the best way to look at stuff like that is to look at the data. So here we've got the green line represents sold price per foot. And for this 5-county area, going back from 2007 to current, you can see back in 2007, the price per foot there was about $103 a foot. You can see during at the tail end of after the fallout from the crash, it hit a low of about $88 a foot in 11, and now has climbed its way back up to about $123 a foot. You can see that brown line, which represents the days on market. This is the median time it's taking to sell property. Well, that's continued to, it went up around 2011. And about the same time that prices hit bottom, the time to sell started to come down too. And the time to sell has not really stopped its decline, and prices have not really stopped their increase. Now, if we look at this, with this idea of maybe a bubble in mind or a correction coming, if we look at it over the past 10 years to see what's happened, you'll see that the median price per foot has increased 21.4% in 10 years. Well, that's 2.4% a year. From a historical standpoint, that's fine. That's actually a tad low. So that's not scary. Now, if we look at just what's happened, though, since 2011, it does show a pretty radical increase here. It shows that the median price per foot in the last 6 years has increased 42% in this 5-county market. That's 7% a year. That's higher. That's way higher than what the historic norm is. Depending on what time period you look at, the historic norm is about 3.6%, give or take, per year in increase in home prices. So that part there is a little concerning, just that amount of, now granted, we were recovering from a dip, but still though, it's more than recovered from the dip and now continued on to significantly higher than where it started. So now, just to kind of give a comparison, if we go back, I wanted to take, I don't normally do that on this report, but I'm going to take just a little extra time here. If we go back and look at the period from 2000 to 2006 or 7, really 6 is about when it peaked. It just kind of flattened. But if we look at that 6-year period that built up to the bubble, which was in 06, and then just kind of stalled there for a little bit, and then finally the bubble burst in 8. If we look at that, and let's just see what happened there, and you can see that the median price per foot back in 2000 was 80. It hit 110 a foot in 2006 and then stayed there. You can also see how the days on market increased dramatically over that period from 34 days to about 72 days. So if we do the same thing here and look at that, over that 6-year period, that was a 37.5% increase. I don't know, it's late, quick math, that's about 6.5%, or a little over 6% a year. So what I just showed you is the median price per foot in the last 6 years has increased at a greater rate than it did in that 6-year period that led up to the bubble bursting. So I would say that's a warning flag. I'll give that a red flag. Now, something else I looked at here is if we look at this chart, which shows the percentage of list price and the percentage of the original list price that homes have sold for. So in other words, when they did sell, what percentage of the price they were listed at did they sell for? Listed at, at the time of sale, which that would be the brown line on top, and then the green line is at the time they sold, what percentage of the original list price that they hit the market at was it? And you can see over this past 10-year period, again with the dip in 11, those have increased. They're up to very high levels, and the two have closed. So houses are selling for much closer to the list price than they were in the original list price. So, no real indicators that we're seeing this in the market yet. Now let's look at this is our STL market report, another proprietary piece of software we developed. And you can see here on the top row here, the left side is number of homes sold. Now we look at a 12-month period versus a prior 12-month period. So the most recent full 12-month period would be through the end of September last month. And we compare it to the prior 12-month period. So this gives us a real good look, takes out the seasonality of things. And you can see for this 5-county market, home sales are up about 4% in the last 12 months versus the prior. Home price is up about 5.66%, 5 2/3%. And if we go down to the next row there, we can see the pricing trend is down a little bit, the price per foot. That would be normal because we're going into October and November, headed to winter. And if we go down to the bottom one, we can see the number of months supply of homes for sale is just under 3 months, so still very low. So nothing that, I guess my conclusion from that would be we're not seeing it yet, but at the rate that the prices have been increasing, I do think we'll see some correction there. I'm not saying any bubble bursting or anything like that, but I do think we'll see some correction. We'll keep a close eye on it and see where it goes. Now, when we talk about months supply, that's been extremely low. The inventories have been low. We compute months supply by looking at what's out there and divide it by what's sold in the last 30 days, what rate they're selling at. And you can see for all the counties here, I've got all the counties listed that make up that 5-county area. I've also got the 5-county area. I've got the MSA. For the MSA as a whole, it's about 3 1/4 months supply. The rest of them right around 3 months, a little bit higher, a little bit lower. So a little bit higher than it's been, but still pretty low. Here's price trend based upon price per foot. You can see the trend for all the counties, with the exception of the city of St. Louis, is on a little bit of a downward trend, which again is expected given the time of year. Top sellers markets, we got a bunch of sellers markets. These would be markets where inventory is low. Here's the top 10. The lowest one has less than a 1 month supply. The highest one's still under 2 months. So most of these have, 1 to 1 3/4 months supply, very low supply. Shrewsbury, St. Peters, Glendale, New Haven, Crestwood, Manchester, Moscow Mills, Maryland Heights, Bridgeton, Webster Groves, a variety of areas from North County to South County, a little bit of West County, and St. Charles County. Now, buyers markets, there are a few. There's, what do we got there? 2, 4, 6, 8 to be exact. Buyers markets are where, this is just based upon supply. Buyers markets are where there's more than 6 months supply. And you can see we've got Pine Lawn, North County area, about 9.5 months. Weldon Springs, St. Charles, Sullivan out in Franklin County, Ladue, Frontenac, a couple of pricey markets, Burns Mill, Delwood, Peevely. So there are some buyers markets. Hey, remember, be smart when it comes to buying or selling. Get your Smart Guide to Buying Your Home or Smart Guide to Selling Your Home. This is not canned garbage like you see out there in a lot of places. These are magazines that we developed. It's real content by real people. We also enlisted some other St. Louis professionals, contractors, mortgage people, title people. These are great guides. You can get them by going to smartguidetobuyingyourhome.com or smartguidetosellingyourhome.com. You can view it online there. You can download it or let us know. Contact us. We'll be happy to mail it to you. It's a beautiful full-color magazine. Also, when you're searching for homes to sell or homes to buy, go to St. Louis's best home search site, stlouisrealestatesearch.com, stlouisrealestatesearch.com. And on our site, everything comes from the MLS. There is no site in the world that we're aware of that is updated more frequently than our site. We update it completely every 5 minutes. Every 5 minutes, 24/7, it's updated. We also don't waste your time like Realtor.com and Zillow do by showing you in your search results properties that already have contracts. All that does is tick you off and it wastes your time. If something comes up in the search result, it's still being reported as active in the MLS within the last 5 minutes. So we try to save you time there. We got a lot of ways to help you on our site too. We have real live real estate people. This is a real estate company site. It's not like a Zillow or some of these other national sites where they're just a website. We have real live people. You want to see a home, you have questions, we got an 800 number there you can call, 844 MLS site. Easy to remember. We also got live chat. See the little happy guy down there? My daughter created that. That's great. And but then that's manned by, half the time it's manned by me, so you might even talk to me. And but if you don't get me, you'll get a real live real estate person on the live chat. And we are St. Louis's favorite real estate search site. Don't take my word for it. Google it. Look at this. St. Louis' favorite real estate search site. Take out the ad at the top, where it says ad. Those are all just people are paying to be there. But on organic search results, #1 for St. Louis' favorite real estate search. That's us right there. We're also the best one. Do the same thing. Take out the ads on the top that say ad, 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 and you get to St. Louis Real Estate Search. Just had to show that off. Find your home's value online in under a minute as well. Go to stlouishouseprices.com. Stick your address in and find out what your home is worth. Also, St. Louis's favorite open house site happens to be ours. We got it all. stlouisopenhouses.com, stlouisopenhouses.com. It'll have all the homes that are open this weekend. You can search by city, school, whatever. Also, we've got a load of content. I know it's a good market. People are tempted to do a FSBO to sell it themselves. It's a bad idea. I am not saying that just because we're in the real estate business. I'm not one of these Kool-Aid drinking people, the realtor Kool-Aid thing that just repeats the stuff that they're told. Like, for example, you hear a lot of realtors talking about, oh my gosh, the mortgage interest deduction might go away and it'll hurt. That's bogus. Read some of my articles on it. It won't hurt you at all. However, when it comes to FSBOs, I will tell you it's a bad idea. And way too long a story to explain it here. Go to don'tsellfsbo.com, don'tsellfsbo.com, and you can read all about it. Also, real bad idea if you're a buyer to buy a FSBO direct. Go to don'tbuyfsbo.com. FSBOs can be great deals. In fact, buyers, okay, all you sellers now don't listen. But if you're a buyer, buying a FSBO can be great if you get a great agent like the agents we have at Moore to represent you as a buyer's agent. Why is it so great? Well, first off, we'll handle everything and we'll represent you, and it'll be our buyer's agent job to get you the best deal possible. Plus, the good news is when you buy a FSBO, you usually buy it for considerably less than it's worth. FSBOs rarely sell for what they're really worth because these people are trying to, I don't know, they want to circumvent the real estate professionals and do it on their own, and typically it results in less price. So from a buyer standpoint, they can be a good deal, but you definitely want to be represented though. You got to have a professional in there that knows what they're doing. You want to be able to use the St. Louis Association of Realtors. Contracts have also been approved by the Bar Association, things like that. So don't buy FSBO.com, don't sell FSBO.com. And that is it. Remember, we're more realtors. You can check us out. You can come to stlre.com, stlre.com. Give me a call. There's my personal number, 314-332-1012, 314-332-1012. Call my business partner, John Williams, 314-332-1010, or call any of our fantastic agents. Thank you, and sorry it ran a little long, but a lot of info. And until next month, God bless you.